Hello Wolfpack, in our last video we predicted that there was an 80% chance of a breakdown within 24 hours of that video being posted. We posted the video here just above 40k, and what we saw within a few hours of that video posting is a big crash on Bitcoin in 1 hourly candle, going all the way down from 40k to around 38.5k. That breakdown happened, that prediction was confirmed, that prediction was correct. What we didn't expect, however, even though the prediction was technically correct, is a swing back to the upside, right? We obviously expected it to continue downwards towards this lower dotted support line. However, that was not the case on Bitcoin. Something happened. I would predict manipulation. I don't see a reason why that would happen, but something happened, and Bitcoin has managed to come all the way back up here to the 40k region. So we made a prediction, technically it was proven correct, and then we pumped back up, right? Very weird price action. You don't see things like that happen very often. You don't see a breakdown from an ascending channel formation that's been going on since January and break quickly, wick back up very often. That is clearly a fake out move caused by something abnormal. But the point is, we're here now and we have to analyze where we are from here. So good job on the successful prediction. Let's move on and see where we're going next on Bitcoin. The end result wasn't necessarily what we expected. So let's see. Now, Bitcoin has jumped back above this pennant formation. Obviously, this pennant formation doesn't really exist anymore, right? It's kind of invalidated, it's broken, and we can kind of delete everything we have here on Bitcoin and just start fresh. And I think the best way to start here is go over to the daily chart. But what we need to note is that these recent candle formations have been very bearish. These are long wicks to the upside, right? It represents a top. We can also see it's rounding out quite perfectly, and I would expect Bitcoin in the short term, probably by the time this video goes out, and it's honestly a prediction not even worth making, to come down to around 40.5k, right? That's a 200 USD prediction. Let's just forget about it. But I think it's going to go down a little bit and find some support here before we make the next move. So let's see what's going to happen on Bitcoin. On the daily chart, if we kind of look into it quite logically, we can see the next move is quite clear on Bitcoin. Where we are going next on Bitcoin is up to the Dorsian channel top line, up to the 50-day SMA. We're going to be retesting 42k on Bitcoin. Why is that? Well, we've just wicked downwards. We've held support on this, upwards channel formation. I'm going to make this a solid yellow line, right? This upwards channel formation has been held for support somehow. Some stroke of luck, it's been held. Who knows how? It's been held. We've come back up, and now we need to be testing upper resistance. The next step for Bitcoin, as shown by the Gaussian channel, as shown by the 50 SMA, as shown by the 20 SMA and the Bollinger Bands, as shown by the bull market support band, is at 42k. 42k is the next retest we're going to be having on Bitcoin. I would be very surprised if we don't retest 42k before heading downwards on Bitcoin. Now, obviously, if we break 42k, that's a case for another day. If we break 42k, heading back to this chart here, actually, I don't have it open, but let's go to the 4-hourly chart and get a better look here. Okay, so we're going to 42k. If we break 42k, which is right here, okay, 42k is around here. If we break 42k, we're going to be heading upwards to around 45k. All right. However, I think it's very unlikely that we'll break 42k for the reasons that I'm going to list right now. 42k is not only a region that has held as critical support throughout the entirety of 2021 and late 2020. It is also a region which we're seeing major resistance, right? As I just listed, the Gaussian channel, 50 SMA, Bollinger Bands, and bull market support band. And during a time of clearly bearish price action, there is no reason that I can see on the chart to believe that we're going to be breaking 42k, right? I don't think we're going to break it. I think we'll retest it, and then I think we'll go down from there. Now, the following argument I'm going to make is quite a compelling argument, and it might scare some of you people who kind of have in the mindset that Bitcoin's bottomed out here. There is an argument to be made here. Not really sure if it's my prediction per se, but there is a valid argument to be made here that there could be a severe crash on Bitcoin in May. Let's get into it after we take a quick word from my own BitGet sponsorship. In a time when government regulation constantly threatens crypto investors, being able to access an exchange without KYC being mandatory is absolutely exceptional. This is great for me personally as an Australian because a lot of other exchanges out there like Binance don't allow me to access options due to Australian regulation. BitGet additionally is also host to trading fees even lower than the vast majority of the major exchanges at just 0.2% per trade. Sign up to BitGet using my referral link in the pinned comment below or the description box, and you will receive up to 153 USD deposited into your account as a reward. So this is the May crash potential scenario we're going to be seeing on Bitcoin. Now, my personal prediction on Bitcoin, as you guys would know, and as some of the new viewers would not know, let's just say it, is the 200-week SMA by, at the latest, November to December. All right, so anytime before November to December, probably within November to December, we're going to be reaching a 200-week SMA on Bitcoin. In my personal opinion, that's at 24k, right? I think we're going to 24k on Bitcoin by November to December. Now, given that, there is a compelling argument to be made that this crash could happen a lot earlier in May, right? So not reaching that region in May, but starting in May. And this is a very compelling chart here. I'm looking at the 3-day chart, and there's multiple reasons why I'm bringing it up. I'm also looking at the weekly chart here for Bitcoin that I'll bring up in a second. Multiple interesting pieces of evidence here to look into and make a conclusion from. So the 3-day chart, first and foremost, looking at the MACD. Let's start it off nice and easy. The MACD in 2018 saw a bearish MACD cross, which triggered a 50% correction from around 6K to 3K. That's not much evidence alone, but what we're seeing right now on Bitcoin is a MACD cross, and we will be seeing that within the next probably 3 days here. If we see a red candle, that would trigger a bearish MACD cross, which has historically led to very bearish price action on a 3-day chart. Now, again, that's not really much alone, but what we are seeing is very similar price action to 2018. As you guys would know, this drop is extremely similar to 2018. We've pulled out fractals before that show the resemblance is basically striking, basically uncanny, all right? What we're seeing is a compression between the 50 and the 200 on the 3-day chart, just like 2018, in which the price action is taking place and bouncing between these two indicators until it comes to a point of compression where they can't move between it anymore, which is the 50 and the 200 crossing. That happened in around November 2018 at 6K. And by December 2018, we reached 3K. Just about a month and a half later, we halved in valuation in a month and a half due to the cross between the 50 and the 200 after extensive compression. Now, obviously, here's the thing. Bitcoin is doing the exact same thing it did in 2018, right? This is cause for concern because obviously if the price action is the same, the result is going to be the same. The price action at the moment is the same, and the price action at the moment does suggest the result is going to be the same, in which when we see a cross between the 50 and the 200, which will take place, by the way, in May, right? Early May, remember that, May the 4th. When this takes place on May the 4th, a cross between the 50 and the 200 at this point in time, we can expect a similar result to what we saw in 2018, a big crash. Looking at the weekly chart and using the evidence we just looked at, remember that, May the 4th, we can determine that, well, and this is a trend I determined yesterday and uncovered yesterday, every time the 75 SMA every time the 50 SMA crosses over the 75 SMA, under the 75 SMA, we, on that very same candle, are at the 200-week SMA on Bitcoin after a big crash. Happened in 2015, happened in 2018, and guess when this will be happening this year? On the 2nd of May, right? The 4th of May on the 3-day chart suggests it's going to happen, a big crash. The 2nd of May on this chart, on the weekly chart, suggests it's going to happen, a big crash. That is pretty compelling if you ask me. Now, I don't know if it's compelling enough to tell you that's my prediction, but it's a great observation that we need to be considering. Now, the macro environment, the financial markets macro environment, doesn't do a lot to alleviate this stress that we have here for the crash potentially coming in as little as 2 weeks here. DXY is pumping massively. As you guys would know, the DXY is a chart that's inversed, incredibly inversed to Bitcoin. When this thing goes up, Bitcoin shows weakness. It basically measures the strength of the US dollar in relation to other global currencies, and this thing is skyrocketing. Broke out of a descending wedge formation, broke out of a major 21-year downtrending line, and it's broken above recent resistance as well. So this thing's skyrocketing, has no signs of slowing down. And then on top of that, bond yields in the US, 1-year bond yields have kind of risen 180%. Sorry, not 180%. Over 10x, right? Over 10x, so 18x in the period of, well, let's say what's that? 2 plus 4, that's 6 months. In a period of 6 months, this has risen 18x bond yields, right? This thing is skyrocketing. What does that mean? A lot of people won't know what that means. That means that basically when you see higher bond yields, you see higher, economic risk, and you see, generally speaking, interest rates rising. So, again, interest rates rising, very bearish for the everyday consumer. If it's bearish for the everyday consumer, they have less money to spend. They have less purchasing power. They have less money to spend on companies. If they have less money to spend on companies, stock valuations go down. It's bad for the financial markets. It leads into a recession, right? So the higher bond yields go, it's kind of like an early indicator that this is getting terrible in terms of, economic situation. And essentially, we have no reason to believe at all that the US isn't in a recession or isn't at least going into a recession this year in 2022, right? Very bearish. 50 basis points interest rate hikes have been hinted by the Federal Reserve. And that's obviously not a good sign here for risk on assets. Guess what? Bitcoin is a risk on asset, unfortunately. So the macro environment's not looking good. I mean, we've got pretty solid, I wouldn't say it's my prediction, as I said, but pretty solid evidence to suggest that there is at least a decent probability of a May correction, a big May correction, right? And that would line up with the interest rate hike, right? Interest rates are going to go up potentially 50 basis points at the start of May, which is when this crash is expected. So it kind of all lines up, doesn't it? And then on the shorter term time frame, we've had this weird pump, obviously, and we will be retesting most likely 42k, and I doubt we'll get much higher than that. So other than very, very short term, slightly bullish, I don't think this chart looks bullish at all. Macro environment's not looking good, and the May correction evidence just keeps building and building and building. So before I end the video, I suppose I just want to shout out one more thing. Shout out to Mega Crypto. He's a fellow analyst of mine. We've created this Become a Trader 10-unit course together. If you want to learn how to master technical analysis, you can come and check out this course. We have over 300 to 400 slides here. I think over 86 videos. 8 worksheets, a trading diary as well. We've got lots of information. This is definitely one of the best courses in the game here, and you can email us at cryptoacademycourses@gmail.com for more information, payment information, etc. Any questions about the course. But again, I would really just like to reinstill, go ahead and check out my friend and analyst, Mega Crypto. He helped me create this course. We're co-owners in this course. We created it 50-50, obviously. But he's a great analyst, and he's one of the only analysts, other than myself, that I've seen calling it as it is during this entire connection since November. So go ahead and check him out. Thanks for watching, guys. Hope you enjoyed the video, and I'll catch you in the next one. Cheers. Thanks.